morning. Thank you for joining us this morning for our Survive series here in this crazy market. I have personally fallen in love with reverse mortgages over the last few years, but I get a ton of questions, and a lot of my real estate agents are trying to figure out how to put some deals together that might not otherwise work. And I wanted to have this meeting so we could figure out the best options for our seniors to age in place and be super comfortable. So I invited the super amazing and famous Ken Sawan to join us. So Ken, thank you so much for joining us.
Thanks, Susan. And I'm really glad to be here. It's a beautiful weather outside. Can't complain. It's a wonderful Friday.
Yes, and the weekend is hours away. So go ahead and tell us a little bit about your background.
Ironically enough, my first foray into reverse mortgages was a company out of Atlanta, Unity Mortgage. That was back in 1991. So I've been doing reverse mortgages now for 32 plus years. Born and raised in Cleveland, or Akron, Ohio, actually. Moved to Jersey back in 2014. I have done just about everything you can imagine within this industry. To your point, I fell in love with it a long time ago when I realized what it does for the seniors, how it helps them from a financial position. It makes your golden years a lot more golden.
Yes.
But I will be the first to say it's not for everyone. They've got to be educated. All parties need to understand how it works. But it has truly been a godsend for a lot of people out there it began in 1989. So many years, it's really been a help to a lot of seniors. And I love the program.
Yeah. One of the things that I have found, I say we're in the stress reduction business. Process of a reverse mortgage for seniors is really all about how can we improve the quality of their lives through reducing stress. And I find that seniors are not worried about dying. They are worried about running out of money. Actually, you taught me that, but I see it every day. Let's talk a little bit, can you just do an overview about what a reverse mortgage looks like at a high level?
Sure. Just to add to that, we always call it giving them a peace of mind. Financially, it's one of the most difficult parts of growing old, of retiring. But in a nutshell, the reverse mortgage is a program. Most of them are insured through the FHA or the federal government. And it allows a borrower, if it's a single borrower, they've got to be at least 62 years of age. If it's a couple, one can be under 62 and the other one must be over 62, but you can still get a reverse mortgage. And it allows them to tap into a portion of the equity in their home. And as long as they live in and own the property, they never make a payment back on the mortgage that they borrow. They can if they want, but it's not required like a conventional mortgage. And one thing I want people to understand, the reverse mortgage is like a regular mortgage. You're going to file a mortgage against the property. The borrowers always own the property. We don't get it. A lot of folks think that the lender takes the home after the borrower passes. That could not be more wrong. The estate will get it. If the borrowers or when the borrowers pass away, whoever their estate is, children, grandchildren, their church, they will still inherit that property. And then it will be up to them to decide how they want to pay back the reverse mortgage. But the biggest part of this is they're not going to incur any additional monthly expense by taking out a reverse mortgage. And that's the beauty of it.
I like to say it's a deferred payment mortgage.
Yeah.
When you get into a reverse mortgage, they are protecting a large part of your equity position when they do that, right? Like they're only going to give you access to maybe a third-ish of the equity in your home as a big gross estimate. And so the idea is the house is going to continue to grow in value, ideally, even more than the interest that accrues on the mortgage, on the balance of the mortgage.
Knock on wood. Yes, that's exactly right.
Yeah, that's at least the master plan. Of course, if we have another 2006, then so what happens if the house is underwater?
Yeah, great question. That was a good segue, by the way.
Right.
If we have another 2007, 8, 9 like we had, and there's a 30% loss in value or whatever it is, the program is a non-recourse loan, which basically means the borrowers nor the estate can and never owe more on the property than what the home is worth upon death or sale. There's a built-in mortgage insurance that's insured through the federal government that will take care of any defaulted or deficit amount that's left on the reverse mortgage. So it protects everybody. Worst case scenario, borrowers pass away, the estate gets the home, and if the estate does not want the home, they just walk away from it. Then the lender's got to take care of it. And that's the worst case. They can never inherit a debt above and beyond the value of the home as long as it covers the reverse mortgage program.
The reverse mortgage can't dwindle any other assets that are owned by the senior.
That is correct. We can't go after other assets, life insurance. Maybe they have $100,000 in their checking account. We cannot touch that.
No matter what.
We can only go after the value of the house upon death or sale. it's a consumer protection for them.
The clients that I work with touched my heart in such a big way. The client you and I just closed this week called me she pawned her wedding rings for grocery money the day she called me because she owned her house free and clear, but she had people all after her for expenses. Because, if you live on $2,700 a month in Social Security for a family of two, even if you don't have a house payment, the alligators are coming. So she called me every day and just make sure that we could get desperate to get her loan closed. So one of the recommendations I would make is if you have people in desperate situations, there's several different applications for a reverse mortgage, but desperate situations, the earlier the better to get into that so that the stress level, you hate to see somebody in their 70s just riddled with financial stress. It's just.
Susan, I think the majority when the reverse first came out, the majority of those clients were like that. It was a loan of need and not so much want. I need to pay my bills. I'm living check to check, and you have a glitch. Your refrigerator breaks down. Your house needs a new roof. And if you're living on $2,700 or $2,000 or whatever it is, it's what we call house rich and cash poor. You've got a house worth $200,000, $300,000, $400,000, $600,000 free and clear, but you can't tap into it because you can't increase your monthly debt. The reverse mortgage does away with that. And that was a nice story, by the way, helping her out with she had to pawn her jewelry just to make ends meet.
She funds today. She's a very, very happy human today. She was like, what time is the wire going to go into my account? So a reverse mortgages kind of have a bad reputation. Why is that? They do have a horrible reputation.
And I get this question a lot. And I do a lot of these seminars. I do in-person, Zoom, whatever. And that question comes up, why are they so bad, or why were they so bad? My first thought is the lenders, they don't educate, or the trusted advisors are not educated enough to discuss and explain a reverse mortgage like it should be explained. I said earlier, not everyone should get one of these. And if for some reason we get a feeling that this is not the right option for that borrower, we should walk away. But the world needs to understand how the reverse mortgage works. I think the reputation it got was because people did the reverse mortgage for the wrong reason, or they did it and ended up losing their home in some fashion or the other. But back in the day, back in the early 60s and 70s, banks have been doing reverse mortgages since then for 60 years. And in those beginning days, the bank would actually take your home. They would say, listen, Mr. Jones, we'll give you $1,000 a month, but you're going to sign the house over to us when you pass away or through a legal action. And that's when I think that whole myth developed into what we have today. That could not be further from the truth if you tried. But we're slowly seeing the negative stigma of the reverse mortgage winding down. We don't get nearly that many negative input from the reverse mortgage because we're doing a better job as an industry educating everybody, which makes it a lot better, obviously, because people need to know what they're getting into.
Right. People don't understand that it's a program developed by the Federal Housing Authority, and it's really to help our seniors age in place comfortably. It's way more expensive for us as a society if they have to go into care. If you've ever priced assisted living or even the senior condominium situations, the expenses are off the chain. If I can get a senior in a situation where they can live comfortably and safely in the home that they've lived in their whole life, and not have any ongoing monthly expenses, longevity of a healthy, comfortable lifestyle gets dramatic. And then also the program was super highly regulated in 2015 and 16. So one of the things that people don't know, for example, is when I start working with a client for a reverse mortgage, the very first thing I have to do is send them to third-party counseling. I talk to them, I get their information, I figure out whether it's a good option for them. I talk to them and educate them about the basics. And then the very first thing that happens before I can order appraisal or anything else is I send them a list of people that the computer generates that I don't have any relationship with. And they call and they give their little number so they can look up their file, and they kick them through. It's like an hour and a half of counseling by somebody I've never spoken to explain everything. And so one of the things that I make sure that I do in that process is I encourage the heirs to join that counseling call.
Yeah, absolutely.
Those are the folks that I tend to find that the people who are worried about a reverse mortgage are more the heirs than the parents in most cases.
Yeah, and when we used to track this kind of information, where the deals came from, where the leads came from, at one time it was over 70% of all the calls we received were from the children or the grandchildren or a trusted advisor. And a trusted advisor could be a realtor, financial planner, CPA, elder law attorney, or attorney in general. The biggest change we've seen since probably 2006 and 7, and especially with the meltdown, was the additional consumer protections. The program is not any different than it was back in 89 when it was created. It's just there's a lot more protection to the seniors. There's a lot more protection to the lenders. And I think that's why we're seeing upticks in new programs coming out, because everyone feels more protected with them. But
Yeah.
the technical part of it not really changed a whole lot. The counseling aspect is a huge piece of it. It's so important. We can't even begin processing an application until the counseling's been completed.
Yeah.
So that helps for sure.
So let's talk about, so one of the things I think is so exciting about reverse mortgages is that you can actually use it as a purchase.
Yes.
So for example, I had a client who wanted to live near her grandkids. She's selling a $400,000 house that she owns free and clear. The house she's moving into, though, she would really like the house that's more like 550. That's really close to her grandkids. And she doesn't really want to have a mortgage payment. So what we're doing is we're working on a strategy for her to buy the $550,000 house. She'll bring 375-ish or something to the closing, and then we'll use the reverse mortgage for the remainder to help her live in the house she wants to live in. Now, she could buy that same house 45 minutes away from the grandkids, but the quality of her life is so dramatically different if she can live right down the street from them than if she has to commute 45 minutes to get to her parents. And really for the kids too, because someday mom's going to need some help. And it would be super nice if she wasn't 45 minutes away. To me, that the beauty of that program, it's really about letting folks, these can be, high end net worth people, even, middle class people who have assets. But, if you've got $300,000 or $400,000 in the bank, you don't necessarily want to liquidate the rest of that so that you can live near the grandkids. So it's solving a problem.
And also now the kids have a built-in babysitter if she's nice and close. The reverse for purchase was what we call it here in the industry, was released in 2009. And it slowly has been gaining traction. And realtors love it. It casts a wider net because, like you said, if she sold her current home for 400, she doesn't want to incur an additional debt. She can only buy a house at 400. But with the reverse mortgage, we actually take the mortgage out on the house she wants to buy. We couple those proceeds, add those proceeds to the money she has in her pocket, and then you do the reverse mortgage. It's a one transaction. It's clean. It affords the borrower to maybe buy that house that's a little bit more expensive. But the biggest thing is they do not have a monthly payment once they close the reverse, unless, of course, they want to make payments on it. And I stress that point because a lot of folks, they can afford to, but if Christmas rolls around or something expensive pops up, they don't have to make that monthly payment. The reverse for purchase has definitely gained a lot of attention the last couple of years, especially as the refinance boom has slowed down. Realtors are looking for additional funds in which they can put their senior homeowners into. And we've especially seen it big in the 55 plus communities. We work a lot with those folks as well. It's been great. I love them. When you take a borrower from a home that may be 50, 60, 70 years old, it's a big 2-story colonial in a ranch that's spanking new, that's more senior friendly. It's great. I love it.
And the conversations really are, you worked your whole life to pay off your house. That's a massive accomplishment in life, is to pay off your house so that you can retire. You ought to have the house you want if it's not completely outrageous. And so it's a way to give them kind of 20% more buying power than they might otherwise have. So that's the way I like to think about it. It gives you that extra buying power. Now, the other thing is that seniors don't have a lot of income. So sometimes they can't qualify for conventional loans. Sometimes they have blemishes on their credit for one reason or another. Maybe it was somebody passed away or whatever. How does reverse mortgage handle income and credit in the purchase world?
Yeah, so generally, qualifying for a reverse mortgage is much easier than a traditional. We don't do a lot of DTI stuff. We do look at credit, of course. We look at their income, of course. We put deals together where the credit score was 580 or the income was $900 a month. And there's things we can use, compensating factors that we can use to assist the borrower to qualify legally. We want to keep everything very square because this is an FHA loan. We've got to make sure we do things by the book. The FHA gives us a lot of wiggle room on these things. But I like to say that qualifying for a reverse for purchase, even with some dings on your credit or a little bit of income or low income, usually isn't a problem. We don't generally get a lot of people who make $10,000 a month. As Susan, I'm sure you could attest,
Right.
it's 2,000, 1,500. But again, the reverse mortgage can be used to pay the taxes. It can be used to pay the insurance or the HOA on the properties. So it's a very flexible program from that standpoint.
And since they're not required to make a payment, they don't have to have income to offset the payment. They really just have to show us that they have enough income to pay the taxes and the insurance and the HOA and just some basic living expenses. And so qualifying them is way easier. For me, the net of it is that the happiest clients that I talk to a year later, I try to do annual review with my clients at the end of every year. The happiest clients are my reverse mortgage clients because generally they don't have a lot to do during the day. They stress about money. And so if there's just a way to just give them some stress reduction, like they know they can live in this house for the rest of their life and never have to make a mortgage payment is super, super important.
Yeah, and again, going back to that peace of mind, when I'm talking to loan officers and branch managers and I say, listen, if you get a call from a reverse mortgage client, they leave a message, you better call them back because they don't have a job in most cases. They're going to wait around for you to call because they're excited to talk about the reverse mortgage and what it can do for them. Now, I'm not saying they're all like that. Doing this for so many years, it really prepared me for when I get to retire in a few years. What I can expect and what I do expect as I get older. So it's been a great ride. I love it. I'm glad that the FHA and the other lenders and investors that are out there are looking at new and exciting programs that they can put these folks into because we've barely scratched the surface of what a reverse mortgage can do for our senior population. And as we all know, the boomers are coming up in a big, huge tidal wave. We've got to be prepared to be able to access that equity they have in their home to make their lives a little bit more financially free.
Right. This is a little bit different than it was in the last generation, there were pensions. This generation, not so much pensions, but they also have way more home equity than previous generations did. What do they say? More than 50% of the population owns their home free and clear. Lots of those people are seniors.
Yep.
We're going to wrap up here because I always like to be under 30 minutes, but some of the suggestions, I would just make some suggestions to my realtor partners about working with seniors. And a lot of y'all have your senior certifications, but it is an interesting thing. One of the things we just mentioned is that when you talk to them, they have all day to think about what you talk to them about. I do find that I have to have the same conversation several times sometimes because I think sometimes it's because they overanalyze it and sometimes because they're starting to make it harder to remember things. And obviously they're not as technically savvy. So we have to have strategies around that. We'll go to their home or we'll send couriers to their home, or sometimes we look for someone in the family that's a little bit more advanced if they're super stressed out about technology. You know, some of them don't have computers or cell phones, or if you can get through that part of it, you just have to have some strategies around getting through that part of it. And then there's a trust issue. Seniors are told all the time they're being scammed. And so we have to help them feel comfortable that they're in good hands. A little bit of a different work with them in terms of building trust because of, you know, what they're told all the time. And it happens. My parents are in their 80s and I can't tell you how many times they've given their credit cards to people for something and we had to cancel everything. and they feel so stupid. It's not that. It's just they just don't expect everybody to be trying to take advantage of them.
And you're right. I think building the rapport and that trust factor is the most important thing in the world. That's why this is not a hard close. It's got to be very educated. It's got to be soft. You've got to guide them down that path. And if it makes sense, they'll make the right decision. But I do, in fact, bring somebody else in if you can in the conversation. It's going to make your life a lot easier. But they don't always want somebody else, right? I do find the younger seniors, those in their 60s and early 70s, are a little more tech savvy than those in their 80s and 90s.
Yeah.
80s and 90s, they have somebody working with them.
Yes. So this can be a way to help people achieve their real estate dreams in terms of buying the home they want, where they want. And it also can be a great stress reliever for seniors who want to stay in their home, want to age in place, need money for in-home care, need money to renovate. Lots of times they have deferred maintenance. So those are the two of the different ways that reverse mortgages most often come into play. There's a ton of financial planning tools that you can use reverse mortgages for, but honestly, I end up in one of these two buckets. I'm either helping clients get into the home they want to live in, to retire in a stress-free way, or I'm helping them renovate the house that they're in because that roof really needs to be renovated and they're super stressed out. I appreciate y'all joining us. We will send out the recording. And Ken, thank you so much for spending a few minutes with me this morning. Take care. Thanks.
Thank you very much, guys. Take care all. Have a great weekend.